0.5% year-on-year, among which 43.18 million were breeding cells, up by 27.7%. Second, industrial production rebounded steadily and manufacturing industry demonstrated strong momentum of growth. Total value added 24.5% year-on-year in Q1 or 2.01% quarter-on-quarter, average two-year growth to 6.8%. The industrial output above the designated size in March increased by 14.1% year-on-year or 0.6% month-on-month. State-holding enterprises up by 16.9% year-on-year, shareholding enterprises 23.7%, and foreign, Hong Kong, Macau, and Taiwan enterprises 29.2%. Private enterprises 29.7%. The value added of mining increased by 10.1% year-on-year and average two-year growth 4%. Manufacturing 27.3%, average two-year growth 6.9%. Production and supply of electricity, thermal power, gas and power 15.9% year-on-year, two-year growth 4.8%. Value added of equipment manufacturing and high-tech manufacturing 39.9% and 31.2% respectively, and average two-year growth 9.7% and 12.3%. Production of new energy vehicles, industrial robots, excavating and shoveling machinery, microcomputers, integrated circuits, all witnessed a year-on-year growth of over 60%, and average two-year growth 19%. In March, manufacturing purchasing managers index stood at 51.9%, staying up above the threshold for 13 months in a row. Production operation expectation index was 58.5%. From January to February, profits made by industrial enterprises above designated size totaled 1,114 billion yuan, 2.79 times that of the first 2 months of last year, two-year growth of 31.2%. Profit rate of business revenue of industrial enterprises above the designated size 6.6%, 3.15 percentage points higher than that of the first 2 months in 2020. Third, service sector had a restorative growth with positive market expectation. In Q1, a steady recovery was registered. Value added of transportation, storage, postal services, and real estate services grew by 32.1% and 21.4% year-on-year, and average two-year growth 6.6% and 6.9%. In March, index of services grew by 25.3% year-on-year, average two-year growth 6.8%. In the first 2 months, business revenue of services enterprises up by 37.8% year-on-year, and two-year growth 10%. Of this total, business revenue of information transmission, software and information technology services, and scientific research and technology services 35%, 47.8% year-on-year respectively, average two-year growth of 17.4%, 11.5% respectively. Business activity index for services 55.2%, 4.4 percentage points higher than that in February. Business activity industry index for railway transportation, air, telecommunication, broadcast, TV, satellite transmission, software information technology services, monetary and financial services 60% and above. Business activity index for accommodation, leasing, business services, and resident services hit hard by the spread of COVID-19. They rebounded to expansion range. From the perspective of market expectation, business activity expectation index for services stood at 62.9%, within the high expansion range of 60%. Fourth, market sales improved gradually. In Q1, total retail sales of consumer goods 10,522.1 billion, up by 33.9% year-on-year or 1.86% quarter-on-quarter, two-year growth 4.2%. In March, total retail sales 3,548.4 billion yuan, up by 34.2% year-on-year, 0.4 percentage points higher than that in the first 2 months. Average two-year growth of 6.3%, up by 1.75% month-on-month. Retail sales of consumer goods in urban areas 9,134.5 billion yuan, up by 34.6% year-on-year, two-year growth 4.3%. In rural areas 29.4% year-on-year, or two-year growth 4.3%. By consumption patterns, catering 1,059.6 billion, up by 75.8% year-on-year. Average two-year decline 1%. Retail sales of goods 9,462.5 billion yuan, up by 30.4%. Two-year growth 4.8%. Enterprises above the designated size sales in Q1 was exceeded 10%, covering all 18 categories. Sports, recreational articles, and communication equipment up 45.2% and 42.4% year-on-year respectively. Average two-year growth 17.4% and 17.1% respectively. Online retail sales 2,809.3 billion, up by 29.9% year-on-year. Two-year growth 13.5%.
There was a press conference held by China's State Council Information Office, and the official figure is out. China's economy performed quite well in the first quarter this year. The official figure for GDP growth is 18.3% year-on-year. That's a quite increase from a year ago when the country was hit by the coronavirus epidemic. And also, according to the National Bureau of Statistics, employment and consumer prices were all stable in the first quarter. And we'll break down all those numbers for you on our Global Watch program coming up in about 2 hours. You're watching The World Today on CGTN. Stay with us. Now we turn to the United States. Chicago officials have released a video showing the
by 29.8% year-on-year, an average two-year decrease of 2%, and the real estate development up by 25.6% year-on-year, the average two-year growth of 7.6%. The floor space of commercial buildings sold reached 360.07 million square meters, up by 63.8% year-on-year, average two-year growth of 9.9%. The total sales of commercial buildings were 3,837.8 billion yuan, up by 8.5% year-on-year, an average two-year growth of 19.1%. By industry, the investment in the private industry went up by 45.9% year-on-year, with an average of two-year growth of 14.8%. In the second industry, up by 27.8% year-on-year, with an average two-year decrease of 0.3%. In the tertiary industry, 24.1% up year-on-year, and an average two-year growth of 4%. The private investment was up by 26% year-on-year, average two-year growth of 1.7%. And the investment in high-tech industries grew by 37.3% year-on-year, average growth of 9.9%. Specifically, the investment in high-tech manufacturing and high-tech services grew by 1.6% and 28.6% year-on-year, respectively. In terms of high-tech manufacturing, investment in manufacturing of medical equipment, measuring instruments and meters, and in manufacturing of computers and office devices grew by 50%, 49.5% year-on-year, respectively, with an average two-year growth of 9.1% and 24.2%. In terms of high-tech services, the investment in social sectors went up by 31.7% year-on-year, with an average of two-year growth of 9.6%. The investment in health sector and education went up by 50.9% and 27% year-on-year, average two-year growth of 22.3% and 10.4%, respectively. Imports and exports of goods witnessed noticeable momentum of growth, and trade structure continued to optimize. 7. The consumer price maintained the same level year-on-year, and producer prices for industrial products went up year-on-year. 8. The urban surveyed unemployment rate went down, and the employment was generally stable. In Q1, the newly increased employing people in urban areas numbered 2.97 million. And in March, the urban surveyed unemployment rate was 5.3%, down by 0.2 percentage point compared with that in February, and 0.6 percentage point lower than that of the same period as last year. The surveyed unemployment rate of population with local household registration was 5.3%, and that of population with non-local household registration was 5.4%. The surveyed unemployment rate of population aged from 16 to 24 and from 25 to 29 was 13.6% and 4.8%, respectively. In March, the employees of enterprises worked 46.9 hours per week on average, up by 0.6 hours compared with that in February. At the end of the first quarter, the number of rural migrant workers totaled 174.05 million. 9th, residents' income continued to rise, and the income growth of rural residents outpaced that of urban residents.
In Q1, the national per capita disposable income residence was 9,730 yuan, a nominal increase of 13.7% year-on-year, with an average two-year growth of 7%, or a real increase of 13.7% year-on-year after deducing price factors, with an average two-year growth of 4.5%. In terms of permanent residence, the per capita disposable income of urban households was over 13,000 yuan, a nominal increase of 12.2% year-on-year and a real increase of 12.3%. The capital disposable income of rural households was 5,398 yuan, a nominal increase of 16.3% year-on-year and a real increase of 16.3%. The national per capita salary income, net operative income, net property income, and net income from transfers saw year-on-year growth of 12.4%, 19.5%, 13%, 17%, and 10.7% nominal terms, respectively. The median of national per capita disposable income was 8,014 yuan, an increase of 12.7%. Generally speaking, the national economy in Q1 presented continued momentum of recovery. However, we must be aware that COVID-19 is still raging. Our international landscape is complicated with high uncertainties. At the next stage, we must follow the guidance of Xi Jinping thought on socialism with Chinese characteristics for a new era and continue to consolidate the foundation of stability while pursuing progress. They will maintain consistency, stability, and sustainability of macro policies, deepen reform and opening up, keep the economy within appropriate range, and promote high-quality development of the Chinese economy. Thank you. Thank you very much for the opening remarks, and now the floor is open for questions. Please identify yourself before raising questions. Please. Thank you. CCTV. From the number you said, Madam Liu, the GDP in Q1 achieved a high-speed growth of 18.3%. What are the contributing factors? And also taking into account the general economic operation, how should we understand the data in Q1? And also, we know Q1 is the beginning quarter of this year. How would you comment on the start of the economic operation?
Thank you for the question. Judging from the indicators in Q1, we can have this assessment that in facing with the test of COVID-19 and external uncertainty, we have further consolidated and expanded our progress in COVID control and development. The economy continued to steadily recover, off to a good start. It has the following major 5 features. First, continued improvement in production and demand. Last year, the base number was low, and there is a factor of workers staying put for the Spring Festival. So this year, the trend is different, and we need to have multiple perspectives when we gauge this quarter's growth. As a result of the low base number, the growth of demands, major indicators have been growing at double digits. In Q1, GDP grew by 18.3%, industrial output growth 24.5%, retail sales up 33.9%, fixed asset investment up 25.6%, and trade growth 29.2%. The year-on-year growth all stood at a double-digit level. Quarter to quarter, major indicators continued to grow. In Q1, industrial output grew by 2.01% quarter-on-quarter, retail sales 1.86% quarter-on-quarter, and fixed asset investment growth 2.06%. If we take a look at the 2-year average growth, in Q1, the 2-year average growth was 5%, industrial growth 6.8%, retail sales growth 4.2%, and fixed asset investment growth 2.9%. Trading goods growth, 2-year average growth, is also close to 10%. All those indicators show that the economic performance is in a steady recovery period. Second, prices are generally stable. In Q1, urban surveyed unemployment rate 5.4%, down by 0.4 percentage points. In March, 5.3%, down by 0.6 percentage point. In Q1, we created 2.97 million new urban jobs, 27% of our target for the whole year. On prices, in Q1, prices are generally stable. In March, the trend became 0.4% up from 0.2% down in the previous month, and the growth was moderate. Third, new growth drivers are growing fast. In Q1, high-tech growth and manufacturing growth was 31.2% and 39.9% respectively. Two-year average growth 12.3% and 9.7% respectively. Both are higher than overall industrial output growth. High-tech investment up by 37.3%, which was 9.9% growth on the two-year average, 7 percentage points higher than overall investment. Low-carbon growth was also high. In Q1, new energy vehicle, industrial robot, microcomputing equipment grew by 3.1 times, 1.1 times, and 73.6%. And two-year average growth all higher than 15%. New forms of business keep emerging. In Q1, physical goods online sales grew by 25.8% year-on-year, and two-year average growth 15.4%, which is 21.9% of total retail sales. Fourth, the quality and efficiency are increasing. On corporate profit, in February and January, industrial enterprise profit grew by 1.79 times, and two-year average growth 31.2%. Service industries achieved a profit of 1,690 trillion yuan, who suffered a loss last year. On resident income in Q1, the national average disposable income up by 13.7% and two-year growth 4.5%. And unit GDP energy consumption continued to drop. In Q1, it dropped by 3.1%. Fifth, market expectations are upward. In March, PMI 51.9%, 1.3 percentage points higher than the previous month, and remained in the expansion threshold for 13 consecutive months. Comprehensive PMI index 55.3%, up by 3.7 percentage points. So in those five areas, we can see that the economy continued to recover and enabling factors are accumulating. But we also need to see that COVID-19 is still spreading globally, and the foundation for domestic recovery is yet to be firmed up. Service industries and smaller firms are facing a lot of challenges, so we need to continue to act on the decisions made by the Central Economic Work Conference and the government work report to maintain the consistency and continuity and stability of macro policy to ensure a more firm recovery of the economy. Thank you. Next question. Judging from the statistics of Q1, recovery consumption has rebounded significantly. So what do you assess this recovery, and in what areas there should be further efforts made? Thank you.
Thank you very much for your question. In Q1, the retail sale of consumer goods was up by 33.9% year-on-year, with an average two-year growth of 4.2%. So the consumption market continued the recovery momentum from last year, and showed a momentum of rapid growth, which could be broken down in the following three aspects. First is the rapid growth of retail sales of consumer goods. In Q1, the retail sales of goods were up by 34.4%, with a two-year average growth of 4.8%. And the retail sales of goods by enterprises above the designated price, the year-on-year growth rates of all categories of goods exceeded 10%. And for example, the cosmetics, sports and recreational articles, and telecommunication equipments, for these products, the two-year average growth of the retail sales all exceeded 10%. And second is the growing momentum of online sales. And third is the speedy recovery of offline consumption, in particular catering. In March, the catering revenue increased, and the two-year average growth was 0.9%, for the first time beating the number in the first quarter in 2019. And in Q1, the physical store, for their revenue of retail sales, also increased by 42.2%. The two-year average growth was 4.5% and 0.4 percentage points faster than the number of January and February. Also could be shown, the growing momentum be shown at the Tomb Sweeping Festival. During the festival, over 100 million visits were made in China. It was about 94.5% of the level before the COVID-19 era. And during April 2nd to April 5th, the passengers sent by rail increased by over 200% compared with the year 2020. And the box office exceeded 800 million yuan, registering another new high in history. So from all these numbers, in particular catering, which was seen as a relatively slowly recovered area in the past few months, now are all gaining momentum of speedy recovery. We know that in Q1 last year, the retail sales of consumer goods actually dropped by 19%. But this year we see a recovery momentum. Another contributor is the boost of consumer confidence and the improvement of consumption environment, and also the rebound of residents' income and consumption. Also, we rolled out several encouraging consumption policy to drive the growth of the consumer market. These are all the contributing factors to the recovery of consumer goods retail sales. As for the future trend, generally, since last year, the consumer market has stood the test of COVID, and the mega scale of the Chinese market has gradually emerged, so the upgrade of consumption stays unchanged. And as the economy recovers, the residents' income improves, there will be further and greater consumption capability. And as we improve our COVID protocol and the situation eases, we'll improve the consumption market. Also, as domestic demand rises and the dual circulation new development paradigm becomes more solid, the recovery of the consumption market will be more obvious. That said, COVID is still a challenging issue, so it may affect the confidence of consumer. We'll work harder to pursue parallel progress of COVID containment and social progress, and create enabling conditions for further consumption to make sure that the recovering trend could sustain. Next question, please. Shenzhen media. According to the statistics, the CPI first turned positive, and it stayed the same compared with this time of last year. It is forecast that speculation may foster greater pressure. How would you see the trend in the following month?
Well, thank you for your question. As you mentioned, as we see from the prices of Q1, the prices have been stable. In Q1, the general trend was on par with that of the previous quarter, or Q1 of last year. In March, CPI turned to up a positive 0.4% from a negative 0.2% in the previous month. Generally speaking, the CPI level is at the same level with the same period of last year, and the 0.4% growth in March was moderate. Structure-wise, the major indicators of the growth of the CPI was mainly because of the rise of the price of petroleum and diesel. In March, the price of petroleum and diesel grew by around 12% year on year. So this have been the major attributes to the growth of CPI turning into the positive realms in March, reaching 0.4%. If we take a look at the broader categories of products, including foods, the growth has been moderate, or even the price has been dropping. So the 0.7% drop of food prices has been registered, including the drop of pork price, 10.4%. So the overall growth is moderate, and the prices are generally stable. For the whole year, and category-wise, I wish to first say a few words on industrial consumer goods. In this month, it grew by 1% year on year, and people have a lot of interest in the future projection. On industrial consumer goods, China has a very well-developed industrial system and abundant production capacity, and we also have an effective and strong toolbox of macro management. So in terms of the fundamentals of this industry, there is no foundation for large growth on foods. In recent years, the major attributes to the growth has been the price of pork. Pork price has been dropping for several months year on year, hitting an 18.4% drop this month. And the production capacity of hogs has been recovering significantly. There has been a rise of 29.5% growth of hogs in Q1, and for 6 quarters, it has been rising quarter on quarter. So the production capacity is recovering fast. That means the price of pork is poised to continue to drop. And the price of grains has also been stable. In this year, the production of grains is very good, and we have sufficient supplies. So in terms of the prices of pork and grains, the CPI increase pressure is not very high. In terms of service prices, the service sector is in a period of recovery in terms of both supplies and demand. So the price of services, as this industry continues to recover, it will rise in a moderate way in the future. So in terms of industrial consumer goods, food, and services, the CPI for the whole year is likely to be kept in a moderate range. Thank you. Next question. Thank you. I have two questions. First, on manufacturing investment growth, 29.8%, and 2-year average drop. And in Q1, consumption was better than expectation, but whether the industrial investment will have an impact on future projections. And second question, on China's carbon peaking by 2030, to achieve this goal, what will be the ramifications for the economy? Thank you.
Thank you for your question. First, I think it's a very sharp question. Indeed, as demand increases, indeed there are some areas that cannot recover to the level before COVID. As you said, the average 2-year growth of manufacturing was down by 2%. So now it means that the manufacturing only recovered 96% of the before COVID era. So this number means that the manufacturing companies still face some difficulties, still in the recovering track. So they still have to do something to boost the confidence of the investment in manufacturing. And also the investors are still observing the market. But on the other hand, we have to be aware that there are some positive factors accumulating in boosting the investment in manufacturing. As I said, the profit of large industrial companies increased by large margin. The 2-year average growth reached over 31%. So the performance of the industrial companies are improving. And also, this is the first year of the 14th five-year plan. Some major projects, some projects are well underway and undergoing preparation. And many private company owners are more and more willingly to participate in the building of the major projects. So as we build the emerging industries and upgrade the manufacturing structure, there will be bounds of opportunities for investment. So as the profit of companies rises, and I believe the investors will be more and more confident to invest in manufacturing. And also there will be more upgrading opportunities. So generally, we are confident about the future of the investment in manufacturing. Second, as for the carbon peaking effect on manufacturing investment, I think the commitment to peak carbon emission by 2030 shows the commitment we have toward environment protection. And I believe that this commitment will help us upgrade towards low carbon and green development. We have embarked on this journey. And in Q1, the per unit GDP energy consumption dropped by 3.1%. This shows that we have been taking actions. And I believe that this will contribute to our green and clean development. Next question, please. Hong Kong magazine. The IMF recently uplifted the Chinese economic forecast, predicting that China's economy will achieve the 8.4% growth. What is your view on that?
Thank you for the question. As you mentioned, the IMF has revised its projections for economic growth over the world, and it revised up to China's growth to 8.4% for this year. I think this shows the confidence of international institutions in China's economic growth this year. Well, our view is that given the recovery trend and in consideration of all factors, the economy is expected to firm up further this year. First, in terms of the domestic growth drivers, they have been firming up. First, on consumption. Major contributing factors are turning for the better. In March, sales growth up by 34.2%, which is 0.4 percentage points higher than January and February, and many subsectors are being improved. In March, catering services grew for the first times from the 2019 level. High-tech investment and public welfare investment grew by 9.9% and 9.6%, respectively. Going forward, with the implementation of policy support, the launch of projects, and funding support, investment is expected to steadily recover. In March, something new was also taking place. Imports grew faster, up by 27.7% year-on-year. For the first time, it was higher than the growth of exports. It means domestic demand is recovering faster. Second, the quality of supplies is improving. The industrial transformation is well underway. High-tech production and investment all grew higher than the overall growth. Production utilization rate was also higher. In Q1, industrial capacity utilization rate was 77.2%, up by 9.9 percentage points year-on-year. This number, 77.2%, was also a record high since 2013. Services are steadily picking up. In Q1, the share of services to overall added value was 58.3%, and the contribution rate was also higher. Advanced services, including information transmission, ICT, grew by 17.1% at a 2-year average. Third, market vitality continues to unleash. In this year, macro policies continued to relieve the burden of market entities. We maintained necessary support, improved tax and fee cuts, and help market entities to recover. Market entities expanded fast, and we have seen double-digit growth of newly added market entities every day. And the activity index for manufacturing and non-manufacturing enterprises all stood at around 60%. So in terms of both supply and demand, the quality of supply and demand, and the vitality and dynamism of market entities, all those factors continue to firm up and consolidate, and the recovery in these areas provide the good basis for the fundamentals of long-term growth of the Chinese economy. We have also other advantages in terms of natural resources and human resources. we have also been given strong support to market entities. In conclusion, we have confidence for the trend of further firming up in the economic performance is well-founded. But also, as you mentioned, COVID-19 globally and economic uncertainties still remain. And we need to stay level-headed. And our basis for recovery is yet to be consolidated, and small business growth was also relatively slower. In face with such challenges, we need to continue to consolidate the foundation for economic growth to keep it within a proper range. Thank you. Next question. Thank you. So far, the statistics of the 7th National Census are yet to be released. When will the numbers be released?
Thank you for your attention to the National Population Census. People across society are all concerned about the result of the National Population Census. We also want you to know immediately the result of the census. So in order to provide you as many details as possible, the data will be published in greater detail compared with the 6th National Population Census, and also will make more details public and more announcements. So the preparation has been mounting and greater than the previous publishing work. We'll work harder on the announcement of the outcome, and we will try to do it as early as possible. Thank you. Next question, please. Cover news. 2 questions. First, about the pork price. Recently, pork price has dropped to 10 yuan. How do you predict the future trend of pork price? Will this price level stay stable? And second, how do you evaluate the employment in Q1? There will be over 9 million graduates this year. How about their employment environment?
Well, thank you for the 2 questions. First, on pork prices. I actually touched upon that factor in my previous answers. From current information available, with our measures to stabilize supply and price, the production capacity of hogs has been significantly recovered in Q1. The number of hogs grew by 29.5% year-on-year, and it has been growing for 6 consecutive quarters. As you mentioned, in some areas, pork price has been dropping significantly, and in a national perspective, in March, pork price dropped by 18.4% year-on-year, and also has been dropping quarter-on-quarter, month-on-month. So this means the price of pork is poised to continue to drop. Second, on employment. Entering this year, employment has been generally stable. In Q1, urban surveyed unemployment rate was 5.4% on average, which was 0.4 percentage points lower than the previous year. In March, the urban surveyed unemployment rate was 5.3%, down by 0.6 percentage points year on year. So from those employment statistics, the general situation is stable. But as you mentioned, we faced a lot of overall pressure on employment, and there has been some structural challenges that are emerging. First, we still face the pressure in terms of the overall volume. In Q1, we had 170 million rural migrant workers, which was down by 2.46 million than previous years. It was because service industries, especially small firms, faced a lot of challenges, and they are still in a stage of recovery, and that has affected negatively employment, leading to the drop of number of rural migrant workers, which is yet to recover to pre-COVID level. Also, the unemployment from 16 to 24, it was 13.6%, which is 0.3% higher than last year. That means challenges remain for young people in employment. After Spring Festival, a large number of young people are entering the workforce, leading to the rise of unemployment rate. But on the other hand, it also reflects the activity of employment market. Still, it will take some time to provide jobs for the young people. On the other hand, during our inspection and research programs, we are seeing that in coastal provinces, many firms are finding it hard to recruit new workers. We have recently interviewed over 90,000 industrial firms. 44% of them regarded the shortage of staff as their biggest challenge. Many firms also complained about the difficulty in finding workers, especially skilled and professional workers. This situation has already emerged during COVID-19, so we face multiple challenges in employment. That means going forward, we will need to further strengthen the implementation of the employment first policy as we recover the economy and provide stronger support for employment, put in place better employment services, and expand the market-based channels for job creation so as to gradually overcome the challenges in employment. That said, we are still having a generally stable employment situation. With the rising demand of jobs, we have the conditions and capabilities to maintain a general stability in employment. Thank you. Thank you. With China National Radio, in Q1, consumption grew by 88.5% year on year. And in terms of the real estate prices in 31 major cities, it has also been rising. How do you assess that? And what is the impact on the overall economy?
Whether it's investment or sale of the property market, all indicators are affected by the low base last year. So all registered double-digit growth because of the low base last year. So in light of this new situation, the departments of local governments stick to the commitment of making house a place to live in, not for speculation. They roll out several measures to stabilize the market price of property market. So as the leasing market develops and the rent service gradually be regulated, we believe that the supply and guarantee of basic living needs together with the sale of property market will be combined together. So we believe that there will be a smooth progress of the property market. Next question, please. In the interest of time, last 2 questions. With 21st century economic daily, the market is concerned about the price hike of the commodity market. What is your view on that? And what will the measures to adjust and control the market of commodity?
Well, thank you for your question. Recently, as a result of accommodative liquidities and supplies of commodities, there has been a rise in commodities, the price of commodities. According to international statistics, in Q1, energy price grew by 35.3%. And non-energy grew by 11.8%. In terms of China, some raw materials price also has been growing. This month's PPI year-on-year growth was 4.4%. And for nearly 1.5 years, it has been dropping. In January, this trend has been reversed. From January to March, the number has been rising consecutively. In January, 0.3, February, 1.7, and March, 4.4. And the major reasons for the 4.4% growth was mainly because of crude oil and metal-related industries. Crude oil grew by 11.1% year-on-year, and for metals, up by 17.6%. So generally speaking, PPI has been rising in terms as a structural reason because of the rise of production materials. In this quarter, it grew by 5.8%. In terms of living goods, it grew by 0.1%, which is basically stable. China's economy is now deeply integrated into the global economy, and global commodities prices growth will have an impact on China's domestic prices through various channels. But the major impact is still on upstream industries, and for lower stream industries, the impact is yet to be manifested. For the trend of the whole year, supply and demand is still the dominant feature that decides prices. On China first, the demand and capacity for supplies have been improving. On demand, it is still recovering. So upstream product prices do not have the basis for long-term growth. Thank you. Next question. Thank you. China Finance News. In recent years, a lot of measures have been taken to lower the burden on market entities. Premier Li mentioned that last year we have been able to register a positive growth because of the contribution of market entities. This year, we continue to take multiple measures for market entities. What has been the significant contribution of market entities to economic growth? How do you view the relations between market entities and the economy? Thank you.
Market entities are the basis of the market. Last year, the macro policy to meet the demands of market entities tried hard to reduce the burden of the market entities. And the supporting policies functioned as a protection of market entities and played a significant role, which could be seen by the economic indicators this year. So the market entities are steadily recovering, and from the perspective of the market entities, their production and operation are in smooth progress, and the confidence is gradually bouncing back. The economic operation of the MSMEs reflect the recovery trend. And as been put by the government work report this year, we'll continue to provide support for the market entities and make sure that the policy are consistent, sustainable, and stable. The commitment shows the support for the market entities. I will continue to help them to stand back on their feet. This will not only do good to the macroeconomic performance, but it will also create more jobs and achieve high-quality economic development. So far, the economic performance of the MSMEs is gradually recovering, and the PMI of the MSMEs back to the expansion stage, also a show of confidence. I believe that with the support of the macro policy and the resilient performance of the MSMEs, throughout the year, the market entities will show greater vitality. Thank you. Thank you very much. That concludes today's press conference.